Welcome to our monthly meeting. You should see on your screen the cover of my book, Successful Stock Signals for Traders and Portfolio Managers. And this is the Stock Twits Meetup group. We meet monthly, roundtable discussion. You can also find me on the Seeking Alpha platform. The name of our service there is Daily Index Beaters. So let's get started. We'll have people from all over joining us, hopefully. There's a couple of people waiting in the room now, so let's get started. Bear with me while I pull up my sharing of my screen here so we can get started. And we'll go over here. And let's see, we'll start here. Okay, so on the screen, you should see my smiling face and my Seeking Alpha platform, which is a free platform, and my free blog. And this is one of the articles on the free blog, which is the history of our buy signal, and we'll get into that. And we'll also get into investing for 2022, and maybe a picture is worth 1,000 words. Look at the SPY, and take a look at our model portfolio, which is over here. And we'll look at Yahoo for some of the fundamentals. And so let's get started. We'll start admitting. We got 3 people that are coming in to join us for the roundtable discussion, and so let's start admitting them. And while we're admitting them, we have to put up our disclaimer, because we are not investment advisors. We never recommend stocks or securities, and nothing on this website or on our reports is a recommendation to buy or sell any stock. Okay, we're strictly educational, and we write articles, and as the articles you appear in the newspaper, we have a newsletter, and that's all we do. We're not investment advisors. If you need an investment advisor, we suggest you get one. Okay, so let's get started, and we'll go into the meeting room and start admitting people. And let's see who we got here. Okay, we'll admit Donna here. We'll admit Terry. Okay, folks, welcome to our monthly meeting. On the screen is our disclaimer. We are not investment advisors, and we never recommend stocks. Okay, everybody knows that. We're strictly educational. And on the screen here, I'm scrolling up. As you all know, our seekingalpha.com is a free platform that we are on, and we have a free blog on there called Daily Index Beaters. You can see it up here, Daily Index Beaters, that's us. And this is our free blog, and this is one of our recent articles, a little history of our buy signals and how well they do. And we're going to, this is a roundtable discussion tonight. I'm not doing any presentation, but I will try to get the conversation going by looking at what the investment outlook is for 2022, and see if we can get a discussion going on that. And we'll also look at the SPY and what's happening with the market, see if we can get a discussion going there. I will only be talking just to prompt you to prompt the roundtable discussion. And you can, open up your mic if you would like and just shout out your questions, and shout out what you think of the market, what you think of a stock or stock you would like to look at, and during the silence while you're thinking of that, I will certainly throw up some stocks that most people want to look at, like Apple and so on and so forth. Okay, so we will look at the fundamentals, and we'll also look at the technicals, and we'll look at the model portfolio and how we do that. And just let me pull up here my technical screen so we can pull up charts on any stock you're interested in. Oh, goodness gracious. They want me to log in. Hold on while I do this. Usually I can get in without logging in. Okay, let's see if it works here. What is the problem? Looks like they're down. Okay, so that's all right. We can find the charts on Yahoo. Okay, so let's see if we can get this discussion going. Okay, welcome to our program. We just got knocked off the air and we're trying to recover. So bear with us while we find out who's still connected. Hello, Linda. We got knocked off. How are you? You're still on with us? Okay.
I'm good.
Okay, who's that? Larry?
Roy.
Roy. Okay, Roy, you're in.
Yep.
Okay, and Donna, are you
Lanny.
in?
This is
I am
Lanny.
in.
I'm here. Yeah.
Can you hear me,
Okay,
Tom?
good. And Linda and Ross. Well, Ross is new. I don't know Ross, so we'll just unmute them. We got a small group, so we can have open mics here, folks. Usually when we get 15 or more people on here, we want to keep the mics closed, but with a small group, we can afford to have the mics open. So we'll ask each one on unmute. And okay, so off we go. This is a roundtable discussion, and I will not be making a presentation unless we have silence in the room. So what we're going to do is I will start the ball rolling by looking at the market and where I think we're going in 2022. And then, any questions you have about the market, what you'd like to discuss and find out what other people think of the market, you want to shout them out there and let other people come in and chime in. And roundtable discussion is what this is all about. But if there's a moment of silence, then I will go on and find some things that might jar your memory and things you might want to talk about. Okay. So the first thing is, this is an article. I also would like to remind you that this is being recorded and we may publish it. So if that's a problem for you, you may want to drop out of the program. But if it's not a problem for you, this is what we're doing. We're recording this program, and we may or may not publish it. I don't know if we will or not. But at any rate, this is, as you know, all know, we're on Seeking Alpha, and that's a free platform. And even though they try to get you to sign up for a subscription, it's a free platform. And my blog is free. So what you have on your screen here is a picture is worth 1,000 words about the spy. And I'm looking at the spy and trying to figure out, what the market's doing. And so let's quickly review that. And then if you have any questions on the market, we can go to the market charts and take a look at the market chart. And we can look at any stock you want to look at, and maybe throw the fundamentals up and the technicals and fool around with it, see what the people have to say about it. Nobody has anything to say about it. I always have something. I always have an opinion on every stock. Okay, so we're still admitting people here to the, and so I will be repeating myself until we get everybody on board. So this is a free platform, Seeking Alpha, and my blog is free. And this is a roundtable discussion. The mics are open, and you can just shout in. And we got a small group this time around, so I'm allowing for open mics, and just shout in a question or something you'd like to discuss, or you'd like the group to take a look at, and we'll throw it up on the screen, take a look at it, talk about the fundamentals and techniques. Okay. So we should get a little housekeeping out of the way once again. We have some new people. Our disclaimer is that we are not investment advisors. We never recommend stocks, okay? Strictly educational. We have a newsletter. We write articles on Seeking Alpha, so on and so forth, okay? Now, can everybody see the screen? Are people having problem with my screen? Can you see that we're on Seeking Alpha? Is that the screen?
Yeah, you're fine, Tom. Yeah.
Okay, good. We're all on the same page, folks. Okay, yes. So let's go down here and take a look. Now, this is the monthly chart that I threw up. And you say, my gosh. Let's go back to it. You folks still with me?
Yep.
Yes.
Okay, we're having a little, some technical difficulties here, but that's all right. We will resolve them slowly but surely. Can't move too fast in this environment. Okay, so I posted this thing about the SPY because I'm very interested in what the SPY is telling us. And currently there are a couple of yellow lights flashing and no sell signal yet. Okay. So this article is free of charge. It's up on Seeking Alpha on my blog. Just put in search for Tom Lloyd, and you'll come up with my blog on Seeking Alpha. Okay, they have a very good search mechanism, and all you have to do is put in my name, Tom Lloyd, and this blog will pop up. And so I go into the signals that we're looking at. Okay, so I'm going to skip the verbiage here, because we'll go right to the conclusion, and then we'll look at the chart itself. We know the pullback will occur, and we know the signals will tell us when. Short term, there is no worry because we have no sell signals yet. However, we do have some yellow flashing signals, which I'm going to look at. And we know price will return to the mean, as it always does. It's a well-founded theory, deviation from the mean. That means that prices go way above the moving average, and then they come back down. They go below the moving average, come back to the moving average, and so on and so forth. So they got a fancy name for that called deviation from the mean. So we know that's what happens. It's historical, been proven over and over again every time. So here in the chart, let's see if I can get this chart to work. Sometimes it works, sometimes it doesn't. So I can get it enlarged a little. Oh, hey, look at that. It finally worked for me. Got something working here. Okay, so at the top of the chart, and now don't forget this is a monthly chart. So this is a lagging indicator. And why you say, Tom, why do you use a lagging indicator? Why not use a leading indicator? Well, that's what the traders use. They use leading indicators. And the reason we want to look at a monthly chart is the signals are very slow, but very, very reliable. Now, if you look at a daily chart, the signals are fast. That means there'll be a leading indicator to the weekly chart and a leading indicator to the monthly chart. But the signals are not reliable. They're not that reliable. They're good enough, but they're not. The day traders use them, but investors can't use them. So the weekly chart is the one I like to use because we get rid of some of that noise. But the monthly chart really gets rid of all of the noise, so that when you have a sell signal in a monthly chart, you have to sit up and take notice because the daily chart's already gone underwater and the weekly chart, okay, by the time it hits the monthly. So right now, the monthly chart is looking relatively good. Okay, so right here at the top of the chart is a very colorful thing called money flow. You see this big month. Now, don't forget there's a monthly chart. And every bar right here in the MACD bars, see each one of these bars here? Each one of these bars is 1 month. This is a very long-term chart. We got about 15 bars here just on this upswing here of over a year. So way back when we had this big mountain of green money flow taking the market up, then it decreased. And these red lines, every time the market took a hit on the way down. The change in trend in money flow is very, very important, not the green. It's when it changes trend that's important, okay? So you can see money flow dropping. So no surprise we get a drop in the market right here between the two red lines. No surprise we get a drop in the market here between the two red lines. And no surprise we get a drop in the market here between the two red lines. This is going to happen when we got money flow dropping. So now money flow levels off. And notice that on the most recent highs, now the market's making historic new highs, and yet money flow can't get up to back to where it was. What does that tell us? Well, we're making highs, record highs on very low, half the amount of money flow, okay? So it's not the same as before. So there's a weakness here, okay? Even though we're making historic highs. But it hasn't turned down yet. Notice how it's leveled off. It could go up. Well, we can't predict that. But it's highly unlikely. And you say, well, why is it highly unlikely? Well, you see these bars here as they increase. These bars are increasing because the market momentum is moving up and the market is going to a peak. And now they flatten out. That's the peak of the market. Now, how long can it sustain this peak? Well, that's what we're waiting for. And you see this black line here, when it drops below the red line, that's our sell signal, okay, even when it turns down. Because once it starts turning down, it's not going to reverse. And usually on a monthly chart, that's why these signals are so reliable. Once the signals start turning down, they do not reverse, okay? So we're not in trouble yet, but we have a couple of flashing lights that are saying toppy, 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 toppy. Well, we know the market's toppy. Look at the overextension of price here. Now, as I say, well, how do I know it's overextended? Well, you just draw a line from top to top to top to top to top and extend that line. And that's where the market should be, folks. And where is it? Up here. So that's how much the market is extended. And so we know valuations are very high. PEs are very high, historically high PEs. And the pegs, which is the PE versus growth, are out of sight. So we know the market is overvalued, and it's just a question of time when it's going to top out. There is no sign yet on the monthly chart of price topping out. No sign yet. You want to know what a top is going to look like? It's right here. You see right here? Here it started to top, and then it took off again, okay? Do I expect that to happen again? No, no, no. You see here, it didn't come down to test the red day moving average, but I expect when this tops out, we're coming down to test that 10 months moving average, okay? So it will be a good comeback down to that moving average mean. So if any questions, just shout them out. And finally, down here is the full stochastic. And this is high demand, bullish demand, overbought demand. Look at how many months. We're talking about at least 12, 13, 15 months here where it's been in overbought territory. It can stay overbought for a long time. Just because it's overbought doesn't mean it's going down, okay? when does it go down? Well, we wait for the signal to go down. We have no way of knowing when that signal is going to go down. But we do have a couple of yellow lights that are saying, watch the signal because we think it's going down. Okay, that's what we have. A couple of yellow lights, but no cell signal yet. So we think we're pretty good for the rest of this year, and may have a little bump in the road here in October, late September, October. I don't think it's going to be much of a bump. Now, our model portfolio closes on September 15th. And ordinarily, I would just restart the model portfolio. September 16th, same stocks, put them all back in. But I'm going to wait for the end of September, early October. I should probably wait until the end of October. But by that time, I'll have a feel for whether the market is going to take that seasonal hit. Now, last year, it did take a little hit. But this year, I'm not so sure we're going to even get a hit in October.
Tom, for those of us who follow the model portfolio, what would you recommend that we do? Sell all the
Okay.
stock?
So for the model portfolio, all I can tell you is that my feeling is right now that I would like to go in and reestablish all the stocks that I currently have in the model portfolio. But I'm going to be a little cautious and wait at least until the end of October before I put all those stocks back in. And my theory is that the market is going to be good until next May or June. Okay. And then we'll have to take a serious look at the market.
So if we're following the model portfolio,
yeah,
what do you think? So if we should get out and wait for you to come back in?
well, my feeling is that we're good until the end of the year. So, I would have no problem with starting the model portfolio right up on September 16th again, and which is maybe I'll do that just to be consistent, right? Because if things get bad in October, I can always go to cash. So,
Right.
So just to make it easy for everybody that's new to the model portfolio and what I do, just a footnote that if you're not in the model portfolio, you might want to wait until the end of October. But I think on September 16th, I'll just roll it back into the stocks that I have in the model portfolio. I have 19 stocks out of 20 in the model portfolio. I've been actually thinking of rolling back to 10 stocks, but I can do that during the year. Come May, I can roll back to 10 stocks, or sometime in the year I can roll back to 10 stocks. But I was actually going to set up a 10 stock portfolio. I may still do this. I may start the new portfolio September 16th with 10 stocks at $20,000 for each position. So I may do that. But right now, just to keep things simple, I'll roll over the portfolio on September 16th with all the same stocks, and then I'll make some adjustments at the end of September, October, if I think it's necessary. I may go to maybe a half portfolio in cash or something like that. I may just stop adding stocks until the beginning of November. And so I may take the portfolio down to 10 stocks, $100,000 invested and $100,000 in cash. So let's do it that way. So that's what I'm going to do. September 16th, I'll just roll over the model portfolio. Currently have 19 stocks. I'll probably roll into 18 stocks for the on September 16th. And that way it'll be very clear to everybody what we're doing.
Okay.
I can always cut back on the number of stocks and go to half my portfolio in cash if I think we're going to have a little pullback in October. Okay.
All right.
Does that answer your question?
Yeah, sure does, Tom.
Okay, good. So as you can see here, what we're looking at is this full stochastic signal. We're waiting for that to go down. Now, here's the break that we're looking for. I don't expect it to happen until May, but this is the break I expect to see in May when it breaks below this 80 line here. You see where that red line is? Right at the break there, as it breaks below the 80 line. That is a bear market, folks. As far as I'm concerned, once we go below that line on the monthly chart, not on the weekly, not on the daily, but on the monthly chart. In my book, in chapter 19, I explain this in great detail. that once it goes below that 80 line on the monthly chart, as far as I'm concerned, I will probably go to cash. And I expect that I will do that probably in October of next year. Okay. So this year, I think we're good. Could always get a big surprise this October, but I don't think so. Uh, but we'll wait for the signal. We're not going to guess. So when this signal starts turning down, I will start cutting back on my model portfolio. If it breaks below this line this year, which I don't expect, I would go to cash. Okay. But I don't expect that to happen. I expect this line to maybe do a little dance like it did here. Maybe do one of these. You see how it just went down below and came right back up. But we might see a little weakness. It might come down to the line and then bounce and then go straight across again until May or June or next October. But this can stay overbought for a long time. So we're watching this very closely. We have two flashing yellow lights and we have no sell signal yet. So that's my view on the market. Any questions on the market, where we're going? I think probably I think the market's targeting on the S&P 500. 5,000 on the S&P on the SPY 500. I think that's really what it really wants to go before it turns down. That's my
Tom,
guess.
is there any difference in the use of the Chaikin money flow between an ETF and a stock itself?
No. The Chaikin money flow is not very accurate on the daily chart because it has a gap problem. It doesn't. So when you're using Chaikin money flow, the longer the chart you use, the better the Chaikin money flow is because it eliminates the gap problem. Whenever there's a gap on the daily chart, Chaikin money flow misses it. But if you use the weekly chart, usually it's very rare to get a gap on a weekly chart. So you don't have that problem. And you will never get a gap on a monthly chart. Hardly ever, right? It's almost impossible. So the money flow becomes very reliable on the weekly and monthly chart. So
And you like the Chaikin money flow better than you like the money flow index?
yes, I do.
Okay.
I do. Mark Chaikin and I go way back. We knew each other back when he was on Wall Street and I was on Wall Street. So we're very old friends. And we had many discussions when he was working on this, forming this Chaikin money flow, and lots of discussions we had together. So I'm a little prejudiced because my thoughts are involved in Chaikin money flow, and so I still very friendly with Mark. And by the way, he's got an excellent service. So it's an expensive service, and if you're willing to spring for the bucks, he's got an excellent service. Excellent. It has a little too much fundamental weighting for me. I prefer a little more technical weighting than he has. He's an excellent technician, and I'll give you a little story on Mark Chaikin. He came to Wall Street in his early years as fundamental analyst. And then there was a big pullback in the market, and the fundamentals all looked good on all these stocks. The fundamentals looked great, but the stocks kept going down. So he says there has to be a better way to look at the market. So that's when he got interested in technical analysis. So he's a very good fundamental analyst and a very good technician. So he's got both the parts of the sandwich, and that's why I like his service very much. But in his work that he publishes, he waits because he was basically a fundamental analyst first and a technical analyst second. He weights the fundamentals more strongly than the technicals, which is okay. I do. I have my MBA in accounting. I love fundamentals too, but I weight the technicals a little more because they give me early warnings that things are going sour or going south on a stock or on the market, and I want to get out. Okay, so much for the market in my view. Any question on where or any discussion? Does anybody want to put in their 2 cents on where they think the market's going and why? And we could look at some charts if you want. Okay, gone on the market. Let's see what else we got to talk about. Let's talk about We're going to get to stocks too in the model portfolio. Um, let's see. Here's the model portfolio. We'll have 20 stocks to talk about, and all the stocks that are in our model portfolio. And then we're going to roll into them, as I said, on September 16th. Roll right back into them. Well, 18 of them anyway, not 20, well, not 19. Okay, so the next article that I think that is up on my blog, free, and so you don't have to copy it here. You can go read it at your leisure. So let's go down basically to my conclusions on what's happening in 2022. First of all, we can read the headlines. In 2022, things are changing, folks. 2021, you could take a dartboard, throw the dart at any and hit and put the Wall Street Journal up there. Any stock it hits, you're going to be a winner. Okay, but 2022 is going to be a lot different. 2022 is going to be, and 2023 going to be a stock pickers market. So while the indexes did great for the last year, fantastic indexes, they're going to have a tough time with the index at the end of 22 and all of 23. And the reason for that is at the end of 22 and at the beginning of 23, we're going to have fading monetary stimulus. Okay, going to be a new ball game, folks. This whole bull market is being fueled by fiscal and monetary stimulus. Okay, and a rebound, an enormous rebound because of that stimulus. Okay, so in a certain sense, we have a bull market, but in another sense, it's not an ordinary fundamental bull market. It's a bull market that was forced by enormous drop in interest rates and an enormous spending by the government. Okay, and that's fading, folks. And it fades at the end of 2022. And as soon as the Fed starts raising rates, the market's going to take a hit. So we know the market's going to take a hit sometime in 2022. And the signals will tell us when. So we'll just wait for the signal. The signal will know before the Fed announces, because there are insiders in government who know what's going on with the Fed and can predict what the Fed's going to do. And they spend their whole profession predicting what the Fed's going to do. And they spend a lot of money to people on the inside down there in Washington, and then they know what the Fed's going to do. So the market will reveal to us when the Fed is going to start raising rates, long before the Fed announces it, I can assure you. We're going to have a fading dividend strategy because this is for 2023 mostly. Dividend strategy probably still will be good for 2022. But as interest rates go up, that strategy, which is very popular on Seeking Alpha, by the way, everybody on Seeking Alpha, it seems like they're in dividend stocks. And that game's going to go away in 2023. 2022, I guess, could still stick around for then. But it's been a terrific game for the last 2 years, 3 years. High dividend stocks, that was way to go. Okay, fading leverage strategy. Okay, so as soon as the interest rates start going up in 2023 for sure, and to 2022 probable, you're not going to be able to get all that cheap money to buy back stock, okay, and bloat the debt, okay, and you just take a look at the debt on Apple, for example, and how it's blown up, and but of course they're a cash cow, so they can get away with it. But there are other companies like IBM that have a very, very bloated debt level. And so some of these companies with big debt, that they've been able to take on this debt and buy back their stock and pay big dividends. And that's going to fade in 2023, and it will start at the end of 2022. So you can see how dramatic things are going to change at the end of 2022 and for all of 2023. But we don't have to worry short term. Fiscal stimulus, that's going to be good probably for all of 2022, I would think, because it's a $3 trillion bill they're trying to get through Congress, and it'll take them years to before we spend all that money, probably at least 2 or 3 years. And the Delta variant is the only reason the Fed hasn't raised rates and tapered is because of the Delta variant and the still high unemployment rate. Okay, so one of the things that I'm watching very closely are the permanent changes that have taken place because of the pandemic and the stocks that are going to be continue to do well because of the permanent changes. And I think those stocks, we all know about them, the stay-at-home stocks. Now, people are going to go back to work for 3 days a week, maybe, and but they'll still be home at 2 days a week, or maybe 3 days a week, or maybe all week, and they'll still be at home using all of this technology so that they don't have to go back to the office. Okay. Once people get used to working at home, very tough to get them to come back to the office, especially in the lower level, in the executive suite. Jamie Dimon says, forget Zoom. The executive suite guys, I want you in the office talking to me. So and that's what Jamie Dimon told all this top executives at JP Morgan. And I'm sure there are a lot of top executives a lot of CEOs are telling the top executives, I want to see you face to face. I want to talk to you. I want to be in the conference room with you. And I want to get your reports every day. And I don't want the Zoom stuff anymore. Okay. So we know Zoom's going to take, and it is taking a hit in the market right now, Zoom. But there's still going to be a lot of people at home Zooming away and or finding some other way. I mean, Zoom has some competition, so they'll find some other way to do their conference calling. Okay. One of the things I'm watching very closely, market speculation in Bitcoin and the meme stocks. Not good for the market. Very, very bad for the market. Gambling in the market is not good, leads to overvaluation and leads to crashes. 1929, we learned our lesson. I guess we got to learn it all over again. So market pops and drops. We will have between now and the end of 2022, we're going to have a drop. And I think it's that drop that I talked about back to the 10-month moving average. And it could come at any time the Fed starts to taper. Now, don't forget, there are a few people on the Fed that are already talking about tapering, not Jerome Powell, but a few other people. Okay. So I think we've kind of beaten this, that taxes are coming, raising taxes, folks. They're going to raise tax on corporations, they're raising it on individuals. 50 major companies not paying taxes, they're going to pay taxes. Individuals that are not paying taxes, they're going to pay a minimum tax. This is what the Democrats are going to do. And so we're going to see, and forget the estate tax, that's coming back too. So a lot of taxes coming. May not hit individuals like the middle class. The middle class probably won't hit that much, and certainly not the lower class. And they're not going to tax the lower class, and I don't think they're going to tax the middle class, but the upper brackets are going to get taxed. The corporations are going to get taxed. Oh boy. So somebody's got to pay for all of the money we've spent for this pandemic. Okay. So if you would like to receive, if you're not a subscriber to our service, you'd like to receive our Smart Money Report, just email us at dailyindexbeaters@gmail.com. We'll send you a sample. If you like it, we'll sign you up one way or the other. Okay. So much for market stimulus of view on 2022 and 2023. Any questions, any discussion? I'd like to hear from people what you think is going to happen in 2022 and 2023. Anybody have any thoughts? And no, this doesn't have to be profound. It could be your observation about people returning to work. It could be your observation about unemployment. It could be your observation what's going to happen when the unemployment checks stop in September. It could be your observation as to how much money people have to spend on consumer items like iPhones. You don't have to be, we're very open to a discussion of what you're observing on a day-to-day basis, your own personal observations about spending, about what people are doing with their money, and about unemployment, and about the shortage of labor right now. Is that going to come to an end? And is the unemployment rate going to drop? So any discussion on this whatsoever? No? No thoughts?
How about the chip shortage with the car manufacturers?
Yeah, the sad story about that. Uh, there's a concept called just-on-time delivery, which was uh, a theory on productivity, and everybody bought into it because they could cut down on their inventories. And when the pandemic hit, the car companies cut back on their buying of chips. Well, it just so happens that the chips are very important to cars, but for the chip market, the cutback in chips, the chips is a very small part of the semiconductor market. So the people that are making semiconductors said, "Well, screw you, auto, screw you, Detroit, and every other auto manufacturer. You're not an important part of our. And if you're not going to take the inventory just because of the pandemic, well, we're going to get rid of you because we don't make too much money on you to begin with." So that's what happened. So, the automobile makers have nobody to blame but themselves. And so now they're trying to get the chips, and the chip makers have gone on to more profitable customers. And, there's a shortage of chips for the automakers. So, they brought this down on themselves, as far as I'm concerned. And I don't see how they're going to get out of it. The only way, can I tell you how they're going to get out of it? They're going to have to pay through the nose for those chips, because they're going to have to make it so profitable now for the chip makers that the chip makers are going to say, okay, we're going to go back into the auto industry and produce these chips because we can make more money now on auto chips than we can make on any other chip. So that, of course, is going to raise the price of cars. Does that answer your question?
Yes, thanks.
So that's what
Doesn't sound good.
that's what I think about the chips. So I have a friend that works at Nissan, and he says we can't get any new cars to sell. And he just told me this, that they're selling cars above sticker price. So if you go into these dealers that don't have any cars because of the shortage, and they only have so many cars on the lot, you go to the sticker price on the car, they say, "Oh no, we're not selling it. It's $1,000 more than sticker price. And if you don't want to pay $1,000 more than sticker price, we're not going to sell it to you because we got so many customers and so few cars to sell."
Right, and even the used car market went through the roof.
Exactly. So this is what's going on out there. Everything's crazy. The prices for houses crazy. The prices for cars are crazy. Yeah, we're in a crazy kind of. It reminds me of the Roaring '20s because you guys don't remember it. I don't remember it either, even though my parents lived through it and lived through the Depression, and I heard stories about the Roaring '20s from my uncles, and they were all living high on the hog before 1929. So this is we had this crazy gambling during the 1920s in the stock market. The old famous story of Joe Kennedy was having his shoe shine in 1928, and the shoe shine boy was telling about the stocks he was buying. Kennedy went into the office and he sold Old Man Kennedy. This is Old Man Kennedy, President Kennedy's father. Went in and he sold all the stocks and went into the liquor business. Because he said when the shoe shine boys were speculating in stocks, it was time to get out of the stock market. So this type of speculation is very serious. That's going on in the meme stocks and going on in Bitcoin. Very serious speculation. So I don't like seeing that kind of speculation. And so anyway, it's not as bad as 1929 yet, so we don't have to worry. I don't think it's as bad as 1929 anyway. But and it hasn't really affected the whole stock market. We're just dealing with Reddit and Wall Street bets and so on. So I don't think we got a real problem. I think Reddit is going public. Can you believe that? Between Robinhood going public and Reddit going public, I'm shaking my head here. But anyway, that's what happened in the 20s. We had all these crazy things going on. So much for investing in 2022. I guess we can move on to the stocks now, right? Any other questions about autos or any sectors? Because we do sector studies, and we picked the best stocks and the best sectors. And I've been writing in my blog about the best sectors and the best. Actually, I've been writing to my subscribers about the best sectors that are outperforming the market and the best stocks in the sectors that are outperforming the market. So that's the way we select our stocks also for the model portfolio. Okay, so let's go look at some stocks in the model portfolio and how we do it, and why I can roll right out of the stocks in September 15th and roll into new stocks, the same old stocks September 16th. We'll take a look at it. I'll show you why we can do that. Okay, so over here in the SID column is our most famous buy signal, okay, right in here. That's a 20-day bar chart, and here's the signal, 96 out of 100 for Regeneron. It's at the top of our list. So if you go down this signal, you'll see all green signals here, buy signals, 80 to 100, okay? And all those stocks are in our model portfolio. Why? Well, somebody asked us to do a 5-year track record, and we did a 5-year track record, and it shows that, well, let's see if I can pull it up real quick. I think I got it here someplace. Let me show you what it shows. Although I put no faith in it because tomorrow our signals could stop working. But anyway, here's the track record for the new people. I don't know where our SID score. Here's the track record for our SID score. And somebody asked us for the track record. Now, the reason this track record is useless is because there's no guarantee we could do this for 2021, 2022. I mean, but everybody wants to know what we did for the last 5 years. So here's what our buy signal stocks did versus the SPY. 39% versus 12%, 31% versus 19%, 31% versus a minus 6%, 40% versus 29%, 44% versus 16%, 41% versus 11%. So you know the 5-year average for our buy signal stocks is fantastic, and so that's why we try to keep rotating into buy signal stocks in our model portfolio. And that buy signal is the SID buy signal that we were just discussing, okay? So let's go take a look at it. So there's no guarantee this is going to happen in the future, that these signals are going to continue to do that well compared to the SPY. But, you know, people ask us for a 5-year record. And by the way, it's not just retail subscribers. When I was working with portfolio managers, they would always ask for the 5-year record. I used to laugh to myself. These are professionals. What are they asking for the 5-year record? There's no guarantee it's going to work tomorrow, but they always ask for the 5-year record. And we still have people asking for the 5-year record. So this is a 5-year record. And naturally, we know the buy signal's good. We like the buy signal. We use it, and we rotate all our stocks into that buy signal. So when they start dropping below that buy signal, we give them a little leeway. Nike dropped down to a 60. We just got rid of it. Nike had a buy signal, was short-lived, went down to a 60. Now, down at the bottom of the list, here's Apple with a 77 hold, okay? So, you know, we're going to leave it in there. You know, it had a buy signal. You see these green bars here? This is a 20-day bar chart, last 20 days. So those green bars, that's when we had a buy signal. And so we put Apple in the portfolio. We had a buy signal. So now it's not a buy signal. That's all right. 77 is good. In the 70s is good. Just as long as it had a buy signal when we put it. It drops below 70, we get rid of it. And we may even get rid of it when they drop into the low 70s, okay? So we know Apple's overvalued. We know why it's down here at 77 and not up here at 96. Okay, we know that. We know it's overvalued. I mean, the forward PE is enormous. The PEG is crazy. You know, the growth this year is terrific, but the growth next year is not so good. And you know, it's too big to be a growth stock. It started paying dividends. It's not a growth stock, not like when Steve Jobs was in charge. You know, it's valued like it's a growth stock. It's too big to be. I mean, it's so enormous. I mean, there's certain segments of Apple that are growing like crazy, but it hardly moves the needle. The numbers, the revenues are so big on Apple. Okay, so and anyway, Apple's in our model portfolio, and so we keep rotating into these stocks because we like our buy signal, and we think and we know from past experience, at least we have confidence in it from past experience that by rotating into these buy signals, we will stay in stocks that are going to outperform the market. We could be wrong. Our signal could stop working tomorrow, but right now, that's the theory we're working on. Okay. And over here is a neat little signal too that I always look very closely at: the demand supply buy signal, color coded green. All our buy signals are color coded green. Now this is the demand supply 20-day bar chart short-term signal. Intermediate signal is the SID score. Okay, the intermediate to longer term. We hope it's longer term, but we know it's intermediate. But we go down this DS column, short-term signal, and we look for green like D9. That's as high as you can get in demand. And people are chasing the stock. I don't know why they're chasing it. I got a clue. I mean, we've got a fundamental buy signal, a technical buy signal, and we got a 14 applied return green over 10%, gets a green color, 14%. Okay. So we know why it's in our portfolio, but I don't know why they're chasing it. Keep chasing price higher and higher. It's got a D9. It's maximum. We can't get a higher demand signal than that. Here's a D7, another buy signal, Danner. I don't know why they're chasing Danner. I mean, it's got a nice implied return, 23.9%. Got a fundamental buy signal, technical buy signal. So it's got our most important buy signal for fundamentals and technicals. So this is the way we make our decision, and we rotate into these stocks, and it's all by the numbers. Okay, no emotion involved. I'm not in love with Apple. I'm not in love with Regeneron. It's in my portfolio because the numbers are good. When the numbers get bad, I get rid of it. That's simple. No emotion involved. Oh my gosh, I don't want to be in this. How did I get into this? Oh my gosh, gotta get out of this. Oh, sorry about that, folks. The reason I can't go into FinViz is, let me see. Is everybody still with me?
Yes.
Okay, good.
Yes.
Sure. Uh-huh.
Yes.
Just hold on a second. I accidentally went into FinViz and they screw up my computer when I go in there. They don't like me because I don't allow their ads. So let's get back. Sorry about that little technical problem. Okay. So any questions about any of the stocks in our model portfolio, how we pick them, why we like them, why we're trying to, how these signals tell us how we can beat the market? As I said, we really like looking down the stock and seeing these demand. Professionals are not supposed to chase stocks higher. So whenever I see this high demand numbers, I'm shaking my head. I said, professionals are not supposed to chase stocks higher. They're supposed to wait for a pullback. And so I can never understand who the heck is buying the stocks. Now, the fundamental buy signal tells us that the institutions are still buying these stocks. When we don't have them in green with a plus sign, it means that the institutions are selling them. That doesn't mean the stock's going to go down. It just means it doesn't have the institutions. The small guys are buying it, not the big guys. So let's see. It's interesting to note. I want to point out something about Apple. Now, down here at Apple, you'll see we don't have a fundamental buy signal right here. We had a minus buy signal. That minus tells us the institutions are selling. So who are they selling to? They're selling to the small investors. They're selling to the robots. They're selling to anybody that'll buy. And there's a very interesting fact about Apple. Usually when I go into a stock, the stock is owned 80 to 90% by institutions. Do you know that Apple, only 56% of the stock is owned by institutions? Only 56%. That means all the small investors own the stock. They own it more than the institutions. In other words, the institutions would usually own 90% of the stock. And we know from our indicator that on balance, institutions are selling stock. That means they're slowly unwinding their large positions. Some institutions have 100 million shares of Apple in their portfolio. You know how long it would take them to unwind that position if they wanted to sell it? It would take them over a year to just unwind that position. So they have to do it very slowly. And if they have a big position, as they do in Apple, and they can't add to the position because under risk management, maybe they are only allowed to have 3% of their money in any one stock. That's a risk rule. The risk people say, no, you can't have any more than 3% of your money in any one stock. And so if they have more than 3% in Apple, they got to sell it. Not because they're mad at Apple, they don't like Apple. It's because they just have too much of it. Okay. It's too risky to have too much of any one stock in the portfolio. So any questions on our signals? How we use our signals. Our most important signal is the SID signal. That's a longer term signal. We like to look at the short term signal because we're amazed when we see D9 and D7s. Really amazed to see that. And we always
What's keeping us in Intuit?
What's keeping us into it?
Yeah.
Yeah, let's go.
Other than the SID,
It's at the bottom of the list. Okay,
Yeah.
let's take a look at it. Okay, so we go down here to Intuit, and it's telling us it's overvalued. Okay, we got a negative implied return, so it's lost our fundamental signal that tells us whether it's overvalued or undervalued. So it's saying Intuit is overvalued. And it's just about ready, and the institutions are selling on balance, and it's about ready to drop below 80. But look at right here, just recently in the 20-day chart, these green bars are telling us there were people chasing price higher. What is going on in Intuit? With people chasing it higher and it's overvalued. So that's one we probably get rid of. I probably will not put this in the new portfolio. That's, I don't have an implied return buy signal. I don't understand why they're chasing it. I have to have all my signals. I like all my signals. And so, there are better stocks than Intuit. I'll get a stock with better signals than this. So I'll probably dump into it. Okay. That's a stock that I'll probably get rid of. Any questions? Okay. So, the stocks that we watch very closely are the ones that don't have a fundamental buy signal, color-coded green. Okay, so we watch those very closely, even though they have good scores. They're in the portfolio because of the buy signal. And they're in the portfolio because of the good implied return. That means the pricing is good. But why is this selling on balance? Why is this selling on balance? Is it because they have too much of it? Is it because of other reasons? So we watch them closely. And when they get down here, where Intuit is, and we don't have a plus buy signal, and we have a low score of 80 marginal, let's get rid of it. I have no reason to be into it anymore. Okay, and I have plenty of other stocks to go into. It's at the end of 2022, it's going to be hard for me to find 20 stocks, so I may go to a 10 stock portfolio. But right now, it's very easy for me to find 20 stocks. Okay. And because this is the problem that portfolio managers have and why they can't beat the index. They have 100 stocks in their portfolio. If I have trouble finding 20 stocks with buy signals, how the hell do they find 100 stocks with buy signals? That's the problem. That's why they can't beat the index, not because they're dumb. They're the smartest guys on Wall Street. But the numbers work against them. They have 100 stocks in their portfolio. They can't find 100 stocks that have buy signals. So they compromise, they compromise. And that's why they have a tough time beating the index. Got to feel sorry for these portfolio managers. The small investor has such an easy job compared to a professional portfolio manager. I mean, a small investor has such an easy job to beat the index. It's compared to what the professional portfolio manager has to do. Okay, any questions on our signals, on how we rotate from stocks that are losing the signal into stocks that we just went into Regeneron, and it's the highest signal on our thing. We just rolled into this one. So we got rid of Nike and we rolled into Regeneron, okay? And that's what we're going to do with Intuit now. We get rid of that. We'll roll into something with a very high 90 buy signal, okay? And we'll keep it until it gets low, and then we'll get rid of it, okay? Interestingly enough, Robert Half is an employment agency. There's a big shortage in employment. Sometimes you can get these themes. It's a theme stock. There's a big, there's a labor shortage for some reason. I don't know why. Maybe it's the unemployment checks. I have no reason. People don't want to go back to work. They're afraid of getting sick. Two of my neighbors just came down with COVID. And I asked them, did they get their shots? And they said no. So I have two neighbors. My other two neighbors don't have shots. They haven't gotten COVID. But my two neighbors across the street didn't have shots, and they got COVID. And luckily, they're young people, and they survived. It didn't even knock them off their feet for just a couple of days. So the young people have an easier time of it. The older people are the ones that have to worry. And now you realize that every day 1,500 people are dying from this thing. We have over 650,000 dead in the United States. We have 40 million people that have contracted this thing. And I mean, it's just enormous. It's an enormous problem. And that's why the Fed is afraid to start tapering and afraid to start raising rates. And things are, the unvaccinated are unfortunately still prone to getting this COVID. Luckily, my neighbors, they got a low dose of it. Thank God. And they're up and walking. We're out walking the babies today, so it's great to see them out there. Okay, any questions? A little diversion, but I think it's important to talk about COVID because it's affecting the way the Fed thinks. Very important to talk about COVID and to know where COVID is and what the COVID clock is doing and saying to the Fed. The Fed is watching COVID like a hawk. So we can't just brush away these statistics that are increasing. And even though it's mainly attacking, 20% of the new COVID cases are young people now. 20% of the new COVID cases are like my neighbor across the street, young people. Okay, so I think we've about covered the stocks. Any stocks you guys are interested in looking at?
How about looking at the Bitcoin chart?
Oh, yeah. What happened to it? They kicked me. They keep kicking me out. Oh, let me look at this. Why are they kicking me out here? On the weekends, they update all their programs. And they love the weekends because nobody's. Look like these guys are down here. Ba, 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 ba. Now I have public charts on stock charts. You go to public charts, you find me. There's the public charts. See if it's working. Maybe they'll let me log in this way. They go down to number 56, where I am. Let's see. Usually around 56.
There he is.
Today's pick, Tom Lloyd. Here I am. So these are my public charts. Anybody can get in and see them. And there's a SPY daily chart, and then I have Apple and the Apple chart, and Amazon, and so on and so forth. Now let me see if I can get signed in this way. Get into my chart system. Public chart list. Boy, they're not prompting me for a login. No, they're not letting anybody log in. Oh, here it is. You guys still with me?
We're
Hello?
here.
Okay,
Yes.
Still here.
yeah, I found my login. Hold on a second. There we are. Okay. So we'll go into our chart list. And oh, let's see, where do I have Bitcoin? Bitcoin. Uh, bu- 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 bum. Market charts, this is what I want. There you go. Okay, Bitcoin. Okay, so let's see if we can enlarge this a little, folks. Get a little more. I like big charts. You can see these tiny signals better. Okay, so this is the daily chart, and I expected this to round up and break down. This is a surprise, positive surprise here. Broke above 50. So I was looking for, it broke above the 200-day moving average, which was very positive. And then it came down and tested the 200-day moving average, which I expected. In technical analysis, when you have a breakout, you come back down and test, okay? So it had a positive breakout above the 200-day, and it came back and it tested it, and now it's gone to a new high. This is bullish, okay? So we have bullish chart. I was counting on the daily, I was counting the legs, okay? So 1, 2, 3, 4, 5 legs. So I was pretty good, sure that we were going to go down. Instead, we did not go down. Usually 5 legs up, 3 legs down, okay? And then 5 legs up again. So this is a big surprise here, folks. So that we got some buyers in there. And you know, I always talk about demand and supply, especially when it comes to Bitcoin. That's all you can look at is demand and supply. So the green is demand. Look at the demand coming down. It was supposed to cross over and go down, and instead it reversed. It went down, it touched the red line and went back up again. So we were looking for a selling cycle here, didn't get it. It skipped the selling cycle. So now it's doing better than the market. This line here tells you whether it's doing as good as the market or better or worse than the market. Uptrend means it's doing better than the market. You can see it was doing worse than the market coming down to the trend line. Now it's doing better. So it looks very bullish here. Demand, okay? Demand is what drives price for Bitcoin. And supply is what takes it down. So you see all the supply here, yeah, and all the demand taking price up. And then the demand started dropping, the supply was going up, and then we had this bullish bounce here. Instead of a bearish crossover, which is what I was expecting, and what most technicians were expecting, It didn't happen. So we got surprises. Technicians just wait for the signal. So we got a bullish signal now on Bitcoin. I don't know why. I don't know who's buying it. Maybe they moved from China to Texas and they're open for business now, right? So I don't know what's going on, but whatever it is, demand has increased for Bitcoin. And there's a lot of organizations, even though there's a lot of bad news, there was some Bitcoin scam involving $3 billion. A Bitcoin scam, an exchange, a Bitcoin exchange. It was this complete scam. And people lost $2 or $3 billion. So we get stories like that, but there are a lot of legitimate Bitcoin exchanges out there. And of course, you can do it on PayPal, as a matter of fact. And so as long as there's legitimate places to trade it, I guess it's going to trade. Now, here's the weekly chart. This is what I go by, okay, to make my decision on what's happening in Bitcoin, whether it be bullish or bearish. Okay, so this is all bullish here. Weekly bars coming down. Then we had the selling cycle. It peaked right here. Then the selling cycle started improving. Now we have a buying cycle. There's a buy signal with the black line crossing above the red line, and the breakout. Okay, and so it's coming up to test resistance. Where is resistance? Well, there's resistance right in here, right up where it bounced last time. Okay, there's certainly resistance at the old high. So amazingly, this looks like it's going to hit congestion right in here. So it's not, you see how easy it was to go up here? Well, it's not going to be that easy now. You see, we got this little candle. So we're not getting the big candles anymore. We're getting, that's a weekly candle. You see how it shrunk all of a sudden? So now we're going to hit congestion. So this was the big run up. Now we're going to find out if it can actually reach up to get to the old high. There's tremendous resistance up here. Tremendous. All the people that got stuck up here can't wait for the price to get back up here so they can get out of it. So all these people are very unhappy right here. And that's called overhead resistance in the technician's world. And so when it gets up there, it's going to have a tough time putting a new high in place. And then it'll come back down and it'll retest support. And support is down here, right down here or down here at 4,200 or right here at 50. So it broke above 50 and, could come back down and test the 50-day moving average or the 200-day moving average. So you can see the green here. There's the buying, very weak. Not like this green over here. Look at that buying. Now we got very weak buying. So we're up here. This is demand, overbought demand. You see how long it was over here and how big the green was? And we just overbought demand. And this green here does not look like it's very healthy like it was over here, okay? So I think we're going to have a little slowdown on this bounce here. That's my expectation. A little slowdown on the bounce. And you can see the big green of money flow here and the kind of muted green money flow here. I mean, it could take off again. And that's possible. It's positive. This is a positive signal here. But look at this enormous, look at the angle of attack here. And we got a nice angle of attack going here. But that overhead resistance is going to slow it down. We're not going to have this going on. We're not going to see that kind of a buildup. Just not going to happen, okay? So any questions on Bitcoin? It's strictly technical trading, strictly technical. They may try to make fundamentals up out of it, but there are no fundamentals. It's strictly how many people can be convinced that Bitcoin's going to 100,000 or 500,000, and how many people have been stung at 60,000 and want to get out of it. That's the question now. This is the big question. How many people were stung at 60,000, and as soon as it hits 60,000, they're going to liquidate? That's the big question. Can anybody answer that for me? What's your guess? Are the people going to liquidate at 60,000, or are they going to hold and wait for 100,000? Anybody have an opinion? No? Take a guess. This looks very good here, outperforming the market. That's why everybody's in Bitcoin. Anything that outperforms the market is great. So We had, what really boosted Bitcoin was when Tesla went into it. And then there are other companies now that are very big in Bitcoin. I mean, that's, they've forgotten about their original business, and all they're doing is raising money to buy Bitcoin. And so there are companies like that out there that are, they're no longer in the business of manufacturing anything. They're using all their money. They're raising money and putting it right into Bitcoin. And so that's amazing. And I guess if Tesla goes back to letting people buy cars with Bitcoin, or if somebody comes along and says you can really use Bitcoin to buy lots of products, I think I thought I was reading that not Apple, but Facebook was going to develop their own Bitcoin, their own coin. There are going to be people that will come along like Amazon and say, yeah, you can buy any product you want on Amazon using our coin. Okay. Then that coin would be very valuable because you can exchange it for goods, all the goods that are available. So on PayPal, I think that you can buy stuff on PayPal for those vendors on PayPal that are willing to accept Bitcoin. You can use Bitcoin to buy stuff, but I don't know how many vendors on PayPal are willing to accept Bitcoin. We'd be happy to accept Bitcoin for our service. More than happy. You want to pay for our service with Bitcoin? We'll take it. But because we'll take it and we'll immediately liquidate it. We won't accumulate Bitcoins, believe me. We're not in the Bitcoin business. So that's the way that's going. I don't know what's causing this current demand. I don't know what caused it to go from 30,000 up to 50,000. I don't know what's creating that demand. Does anybody have a clue of what created that demand? Just that people thought it was a bargain at 30,000? Does anybody have any feel? Are there other big names coming into Bitcoin like Elon Musk? If you have a big name like Elon Musk going into Bitcoin, then anybody that Bitcoin is not that liquid. So anytime a big investor starts putting millions and millions of dollars into Bitcoin like Elon Musk did, he's going to move the needle. So apparently there's some biggie that came in here. Is there anybody that knows exactly what the buying is that's going on in Bitcoin? Have you been following it? Does anybody know of any big guy like Elon Musk that just went into Bitcoin?
How about ARK?
Who?
ARK, A-R-K.
Oh, ARK. Yeah, no. Did they went into buying Bitcoin, or are they buying the Bitcoin exchange? I knew they were buying one of the exchanges, Coin. They were buying COIN.
Right.
Are they actually buying Bitcoin itself?
No, probably just coin.
Just Coin. Okay. So maybe Coin's moving the needle on here. Maybe that's what's going on. But some big demand took it from 30,000 up to 50,000. And I guess when ARK announced that they were going into Coin in a big way, that that gave a lot of other people confidence to buy Bitcoin again. And they thought it was a bargain at 30,000, that it was going to go back to 60,000. Most technicians, once it started moving up, you see the green cloud here? See this green cloud? That's all support, okay? They just move the support line. See the support going up here? They just take that and they move it over here. It becomes this green cloud. So when it comes down to the support levels, which the green cloud lays out for you, so it came down, a lot of technicians say, well, it didn't violate the green cloud. It's going right back up again. And that's exactly what it did. So the believers in the green cloud, they just jumped on board. Don't forget the robot buying of Bitcoin. The robots are buying and selling this. So the robot buying, they're using all the technical tools, including the cloud. They're using everything. So once they get that buy signal, the robots, once they get a buy signal and it starts getting momentum here, like it did here for 2 weeks. See these 2 weeks here with that momentum? The robots are just buy. Now we got a little sell here. You see that sell week? Well, now the robots are not so anxious to buy. And now we have this week. Last week was a very weak week. right here, that weak candle right there. So the robots are not going to be so anxious to buy here. And we know there's overhead resistance here. Right here at 55,000, going to get stopped dead. Right there. See that? Where that blue line is? The R2 line? Just the R2 line coincidentally is coming across where that resistance is. Okay? You see it went up to 58, came down, tested that area, went up all the way to 64, came back to 60. So as soon as we hit that 54 or 5,000, we're going to come down and test support, which I think it'll come down at least to below 50,000, maybe 48, and it could possibly go down to 42. But it definitely is going to come back to 48, test 48. And I just wonder what moving average we can get. Let's see, I have here the channels, but I took out my moving averages. But let's go look at the daily chart. They'll give us the moving averages. So here's the 4,500 50-day moving average on the daily chart. So it's at 4,500. I would say 4,600. You see that support level? So I think it could come back down to 4,600 when it hits, after it hits that resistance at 55,000 rather, down to 46,000, right? So that's what I'm looking for it to hit resistance here now. I think this run is just about had it. A nice breakout though to a new high. Very bullish, but it should pull back. Any other questions on Bitcoin?
Yeah, Tom, how do you draw the those R1, R2, S1, S2 lines?
Oh yeah. This is an old method. This is an archaic dinosaur method. This is before computers came, the floor brokers had a shortcut method of figuring out resistance and support. Okay, and so in this program they programmed it. They programmed that shorthand method. So this is a shorthand method, the old manual method the brokers used to use for resistance. So it's been computerized, and so if you want to know how the old timers would do it, the R1 and the R2 represents what they would be looking at as resistance, and the S1 and S2 represents what they would be looking at as support levels. Those are the old time floor brokers. Pretty nifty, huh? I like it.
Yeah, look, is that part of stock charts, or do you have to program that?
No, that's part of stock charts.
Oh, okay, cool.
Yeah, that's cool. I like it. I put it on all my charts just for kicks. I draw the resistance and support lines and use the moving averages and everything. But it's always nice to know where the R2 is in this case, up here, 58,000. And I'm looking for resistance right now with this weak candle that we had, and we have the R1 level here. So, it's nice to know these things. It's just another way of looking at support and resistance. You could use the thing I like about it is that it's computerized, and that means the robots could use it. The robots could use anything that's computerized. They can't draw lines like I can draw lines, but they can look at any method that has been computerized. So that's what the robots are using. And they also use the Fibonacci. They love Fibonacci. I don't use Fibonacci because I'm not a trader, but all the traders use Fibonacci, and all of the robots use Fibonacci. So just so you know that. And so if you're day trading, you got to use Fibonacci. Okay.
Can you look at a couple of stocks?
Sure. Let me see.
I think you went for Facebook, so maybe we can look at DOCU, DOCU.
Sure, DOCU. Hold on just a second. Okay, let's see. Okay, just trying to get rid of a, see if I can get rid of this thing. Here we go. See, I have things on my screen that you can't see. So they're blocking my mobility here. Okay, you want to see docu, right? I like to look at the weekly charts. Let's forget it, unless you're a day trader. I'm gonna look at the weekly chart. Okay, docu. Actually, I've been looking at this and we can't get a buy signal on it on a sit score, unfortunately. And it's aggressive growth stocks. We have a tough time with aggressive growth stocks because they're so overvalued. Now, docu is one of these stocks that supposedly the stay-at-home people were using a lot of. And so now the story is that, perhaps it's over with. But the chart looks very good here. Very good. Chart looks great. Let's see. I would like to look at what can I find docu on my work? Yeah, I can't quickly come up with what our screen is saying on it, but the chart looks very, very good here. And on the weekly chart, here's what's happening. You see this drop here in the MACD. So with the buy cycle has already peaked and is dropping. Now it could restart here, because it looks so strong. And we don't have a sell signal here on the MACD yet, okay? But it's weakening. And the question is, we're at the top of the channel here. And that's the Bollinger Band channel. And so it could still hug that channel and still go up. And let's see if we can get a clue here. Demand looks good, no supply. The full stochastic was dropping, but changed its mind. So it's very bullish. We had some selling come in, and now it's turned bullish again. You see these sellers for the last 3 weeks. There was 3 or 4 weeks of selling in here. Now the buyers have come back in, and the sellers couldn't take it down. They took it down a little bit. They couldn't break any support levels. They couldn't even get it down to 275. They got it down to 281 only. So looks very strong. Looks very good. Money flow looks good. I mean, the direction changed a little here, but it's doing a hesitation waltz now. It's like leveling off. So this little slight drop was bearish, but now it's leveling off. And let's see. I don't have my indication of it. I'm sure it's outperforming the market though. So it looks very good. Well, what are you thinking on that? What are you thinking on that? What's your thought?
Yeah, I'm thinking it's still got a run. Just because the stay-at-home, it was a stay-at-home stock.
Yeah.
But I think the story is well extended because the behavior of, or at least the DocuSign, right? It's a signing electronic signature and document verification and stuff like that. So
Yeah,
I think that behavior is probably going to stay. It's probably going to get stronger, and they operate on a subscription model. So I'm thinking, it went up consolidated, digested the move going up, and it's I think it's a stair step in its way up further.
Yeah. I'll tell you, my son has his own wealth management firm, and they use this DocuSign, and it's very convenient. And so I don't know if they have any competition, but my son is using DocuSign for all his clients for them to sign documents, and it's very easy. It works like a charm.
Yeah, I was struggling to find a competitor to this company. No significant competition. So
What about Adobe? Don't they have some ability to sign documents?
they do, but the kind of the management of what DocuSign has, like if there are 10 people in a queue that needs to sign, once the first person is started, it hit the second person and it keeps on. The management of the signature process. These guys have brought it down to a dummy level.
Yeah.
So it's seamless to operate. It is excellent.
Yeah. Well, it's one that we'll never be able to put into our portfolio because we use both fundamentals and technicals. And if the stock is fundamentally overvalued, we can't put it in. But I'm going to go check a little more on Docu and see what I can come up with. You might even get me interested enough to write an article for Seeking Alpha. I haven't written an article in 6 months, so they're after me to write an article. Maybe I'll do it on DocuSign. But I can't put it into my portfolio until it gets a buy signal.
And that's what I've been struggling with myself, Tom. Trying to get a signal to get in.
Yeah.
It's been
Well, you may
a
get a
challenge.
chance. You may get a chance in October. If we get a little sell-off in October or the end of September, October, the problem. Let me tell you, the problem with overvalued stocks is that when we go into 2022, the professional portfolio managers have to go into lower beta stocks because they know 2022 the market's going to take a hit, and they can't be in high beta stocks when the market takes a hit, and it takes them a long time. Unlike the small investor, they can't rotate into low beta stocks overnight. It takes them 6 months to do that rotation. So they're going to be very careful about putting a high beta stock in their portfolio.
Okay, that's interesting, Tom. How do you track the high beta and low beta stock? Is there a way
You
to?
go to FinViz or Yahoo. They show you the beta all the time. FinViz always shows you beta, the box. It shows them whether it's high beta or low beta. Yeah.
Okay.
So you should be able to find that very easy. I would bring it up, but the FinViz gives me a hard time, so I can't bring them up anymore. I got rid of their ads, but now they give me a hard time.
Tom, can we look at FedEx?
FedEx, sure,
FDX? Thank
absolutely.
you.
I'll tell you a funny story. My son, my grandson, went to Annapolis, and he graduated with a nephew of the CEO of FDX. So they were down, traveling with Annapolis, and I forget where FDX is located, but they're down south someplace, and they were in that town. And so the nephew says, "Come on, we'll go stay with my uncle." And he stayed at my grandson stayed at the CEO's house.
Oh, nice. That's great.
Small world. Small world. Now he's flying helicopters.
Wow.
Okay. So FDX, this is the weekly chart. I like to look at the weekly chart because we're not traders. And this is the Bollinger Band, which I like to look at sometimes. I like to look at moving averages, of course, but the moving average here is in the middle of the Bollinger Band. So so it's at the bottom of the Bollinger Band. Demand supply, it's testing. That's all right. It's come all the way down from overbought demand to oversold supply. And so the question is, does it break down when the sellers are in there? That is the question. and it hasn't broken down. What's the breakdown point? If it broke below 233, that would be a breakdown. But it hasn't broken below 233. So this is a normal test. Here was the high at 302. Then it made a new weaker, a high of 318. That wasn't really a gutsy move up, So what it's doing is it's consolidating. See this big gain here from 160 to 290? It's now consolidating that gain. It's not going to go down. I mean, I don't think it's going to break support at 233. And it's just a normal sell cycle where it goes from overbought demand to oversold supply. And I think it's going to work its way out down here. And I don't know when the earnings are coming out, but I checked the earnings, and probably when the earnings come out, if that gets another bounce back up, will be my guess. And look at all the support. You see the green cloud support here? Of course, if it breaks into that, it's in trouble. So it is very important to be looking for a bounce here. If we get some weakness in September and October, it could go down and check the test 233 support. Okay, but I expect support to hold here at 233. I would draw that line across. You see, the trading range, I would draw the line right here at 302, even though 318, I wouldn't even count that. You could draw it at 318. The trading range is between 233 and 318. And so that's the trading range. It's a big trading range, but that's the trading range it's working at. And all because of this big jump up here. And it's consolidating that big jump up. And that's normal. So I would say that the portfolio managers would start buying it at 233. That'd be my guess. If I were a portfolio manager, that's what I would be doing if it was in my portfolio. It's not in my portfolio because it doesn't have a SID buy signal. But if it had a SID buy signal and it was down here, I'd be buying some more of it. Okay. Any other stocks we want to look at?
Micron?
Sure. I'm sorry I didn't put up my 500 stocks so we could look at what our signals are saying on it. And I can't do it now because it's but the chart tells us a lot. Okay, Micron, it had a big run up. I've been following Micron since it was $5 a share. And I wrote an article for Facebook, for Seeking Alpha when it was $15 a share. So anyway, that's the kind of run it has. And you see down here the oversold supply, and it tried to get up and it failed right here. See this failure to get going? Now it's going to try again. And see these big lines of selling here, big volume selling. That's the problem. Every time it tries to get going, there's a seller comes in. And I explained to you that these portfolio managers, if they have, 10 or 15 million shares and they're unwinding their position, every time they get a bounce, they start selling again. They wait for bounces to sell to get out of their position. And that's what's going on with Micron. So when those sellers are out of the way, that's when Micron will go up, and they're not out of the way yet. And you see the downtrend here in the Bollinger Band. So you're fighting a downtrend stock. We got to wait for it to turn. It hasn't turned. You have to, using the Bollinger Band, you have to wait for a breakout above the line in the middle here, that dotted line. Break above that dotted line, and it goes up to the top of the Bollinger Band. That's your breakout that you're looking for. We don't have that. Instead, it keeps honoring this dotted line and falling back again. That means the sellers are not done. These sellers are not done. Every time it comes up that dotted line, boom, they knock it down again. So there's a big seller there. I don't know who big sellers. Some people, portfolio managers, are convinced that they want to take profits in it. And don't forget, it's a cyclical stock, and that's the reason why. Okay, so that's what's going on. There's just too many people selling it. Every time it goes up, the sellers come in. We are not past that yet. Okay?
Thank you.
Any questions on it?
No, thank you.
Yeah. Now, here, we do have a little improvement here. You see the selling cycles coming to an end? And
Hmm.
if we got a buy signal here on the MACD, if that block line goes above the red line, that would be good. Then you're going to see a breakup above that dotted line. Okay? But that's what you got to be looking for. And we need these bars to continue to increase. We need the black line to go above the red line on the MACD. Okay? And of course, if you're using money flow like I like to use, a change in direction. You see the change in direction? That's important. But we had that change in direction, then it failed here. Now we have another change in direction. But the problem is we went from this shallow supply to deeper supply. So now we're improving. But the question is that improvement going to continue? If we get, it's going to see the improvement here. We're trying to get up from, once again, we're trying to get out of that supply, and money flow is trying to improve, and we're trying to get a buy signal in the MACD. So we're going to try again. And if the MACD turns into a buy signal, you're going to see that improvement. So watch the MACD very closely. And don't forget, it's a weekly signal. It's slowly improving. So you've got several weeks to watch it here. Probably take 2 or 3 weeks before you get a signal. Unfortunately, we're going into a bad part of the market here at the end of September, beginning of October. Okay, enough said. Any other stocks we want to look at?
Yeah, Tom, can you look at Align, ALGM?
Okay, so we got the MACD improving, shallow buy cycle, but it's a buy cycle. And we got new highs, breaking above the Bollinger Band and hugging the Bollinger Band, uptrend in the Bollinger. Looks very good. So technically looks excellent. Overbought demand. Okay, a lot of demand here. And then the shallow demand, but increasing demand. So yeah, it looks very good. Technically looks very good. Overbought demand. And we got some nice green money flow. Direction dropped here for a little bit. I'm going to watch that a little closely. Don't forget, it takes a little while for this direction to really affect what's going on. So you have a little yellow flashing lights. Here's a yellow flashing light. Here's a little yellow flashing light. It's not a sell signal yet. So looks very good though. Bollinger Band, a little overbought on the Bollinger Band, right? And we got a nice buy signal here on the MACD still going on. Looks good. So, no sell signal here yet. Looks very good. Any others? Anybody interested in any others? Okay, folks, been very nice being with you when we always went to our program with our disclaimer. So you don't have to stay for this, but I have to go through it because it's a recorded program. And thanks you for staying tuned. And we may put it up, and if we put it up, we'll notify you. If you want to see yourself on tape. So here's our disclaimer. We're not investment advisors. We never recommend stocks or securities. We're purely educational. If you need a financial advisor, we suggest you get one. Our signals, our technical and fundamental signals can be wrong. We use fundamental data that is purely guesswork on the part of analysts, and they can be wrong. And therefore our system can be wrong because we use this kind of stuff. And our technical signals could be wrong. Okay, nice being with you. Have a great week. And I hope you start off the new year. If you're celebrating the new year, I hope you start off New Year with a bang. Bye-bye, folks.
Thank you.
Bye.
Thank you, Tom.
Bye.